We are joined from Dubai by Vijay Valecha, CIO at Century Financial. Vijay, welcome to the show. So, Vijay, if growth in China rebounds and reaches record levels, what will happen to inflation, which all central banks around the world are trying to tame? Uh, it has been doing and is trying to do it now.
Well, inflation has been the biggest concern since the start of 2022. However, the reopening of China will actually not add to inflation, but will actually be a more of a metric which will actually stabilize the global economy. It's not much of a worry when it comes to inflation because as China reopens, yes, the travel will definitely increase, but along with travel increase, we will also see the supply chain will get more and more regulated. If supply chain actually gets better, we will see the exact opposite effect on inflation as well. So inflation should not be impacted with the China reopening. Inflation looks like it is on the downward curve, and I think it should continue that way.
This will continue with the steps taken by central banks, with improvement in global economy, and with the fears of recession receding. What will support this, and how will this reopening of China, which is expected to add $500 billion to global demand, what is the impact of this?
Well, the major impact of reopening of China will obviously be the reopening of actually the travel industry. Most of the travel stocks, the tourism stocks are actually down quite a bit, and those stocks are actually looking like they're taking a rebound. That rebound actually will help stabilize the markets, and that will actually overall be good for the economy. When it comes to inflation, we are seeing that central banks around the world have taken harsh measures, and most importantly, right timely measures. We have seen inflation levels come down in the US from 9.1% in June 2022 to almost 6.5%. We actually anticipate that number to go to 6.1 next month, and going forward probably by the mid of the year to 3 or 4%. So inflation will not be the major problem when it comes to global markets this year. It will more likely be unemployment. And unemployment will be the number that will actually matter going forward in the second quarter onwards this year.
Before talking about unemployment, let's talk about oil. The reopening of China means rebound in demand of China, means more travel, and also we'll see more demand for kerosene, the highest or the most expensive fuel, which puts pressure or will raise energy costs, which could impact inflation and put pressure on it. Do you think we can put question marks at least on how the impact of inflation, because if it impacts our prices, it will impact inflation, right?
Definitely, oil is one of the major components that actually cause and what you can say is the effect of inflation as well. At the same time, although we are seeing a defractioning of oil, just like how we are seeing a decoupling in the markets and decoupling in inflation around the world, we are seeing that oil prices are actually right now being decoupled. We are seeing natural gas prices coming down, gasoline prices moving up, although Brent and WTI pretty much remaining stable. And by the looks of it, the OPEC Plus is not looking like they might be actually reducing supply any further. If there is no reduction in supply, we don't really see the rebound in oil to be back to 100 levels. We expect oil to remain in the range between the 70 to 85 range where it is right now, and it looks like it is balanced at this level. Given these levels, it won't really make a difference on inflation, and oil prices will not be soaring this year, at least what it looks like as of now.
What is the biggest change we can expect or keep an eye on when it comes to China and reopening in China? What is the thing that could have the most impact or could be most impacted?
Well, we are seeing certain things that really will be impacted. Of course, the base metals should be impacted. When we see reopening of China, we actually expect base metals to be moving upwards. Copper is definitely one of them. Iron ore. We look at the metal side to be positive. Besides metals, we actually expect the travel and tourism industry to do much better. That will actually be a very good sector to invest in immediately. Besides those things, we actually think that the global economy stabilization, which is the most important thing, will come in. As I spoke about the decoupling of markets, we actually saw that the Hang Seng and the Shanghai markets have probably taken a bottom all throughout last year, and they look like the bottom has been in place. Probably we can expect that the Chinese markets, including Shanghai and Hong Kong, will actually be the best performing markets this year.
Vijay Valecha, thank you so much for being us from Century Financial. Have a nice day.
Thank you.
Thank you, sir, for having joined us today.
Thanks a lot.